Cryptocurrencies and cannabis stocks were once all the rage. Now it's SPACs, also known as Special Purpose Acquisition or blank check companies. A SPAC raises money from investors in a public offering for a war chest it uses to go shopping for an attractive private company. If it finds a good prospect and can strike a deal, then it merges with the private company and, presto changeo, the private company is now public.
There have been a number of very, very successful SPAC deals. And I think there are advantages, structural advantages, SPACs over the IPO, which is, as we talked about, a shorter process, more bespoke transactions.
For companies hoping to go public, SPACs are an attractive option. They do away with all those messy issues like paying underwriters and undergoing regulatory scrutiny that come with an IPO or a direct listing. Blank check companies have already raised a record $41 billion this year, led by Bill Ackman's record SPAC, which all by itself raised $4 billion this past summer.
So we've designed the most friction-free structure in which to go public, and that, we think, is going to give us an opportunity to buy great business.
SPACs are not risk-free. Of the 313 SPAC offerings since 2015, only 93 have taken a company public, according to Renaissance Capital, and not all of the deals were home runs. Only 29 of those SPACs produced positive returns through September. SPACs have attracted interest mostly from institutional investors and hedge funds. Retail investors who want a piece of the action can buy into the Defiance Next Gen SPAC-derived ETF, ticker SPAK, which debuted this month.
We find so many great companies that are going to be those enduring leaders tomorrow, that will be the Amazons and Microsofts and Googles of tomorrow.
The SPAC trend has some big-name backers, including not only Bill Ackman, but also former House Speaker Paul Ryan, NBA Hall of Famer Shaquille O'Neal, and now SoftBank's Vision Fund. SPACs are even changing the face of baseball. Billy Beane of Moneyball fame became an essential part of the Oakland A's front office. And in 2005, he declined an offer to become general manager of the Boston Red Sox. He stayed with the A's, but now he has a SPAC which, ironically, is on the cusp of buying the parent company of none other than the Boston Red Sox. So it may be a SPAC that takes Billy Beane out of the Oakland franchise and puts him into a Red Sox uniform, at least financially.